Great. Hi, welcome all. So I'm Ju-Vern, and I'm going to be talking about how ignoring finance and operations at your own peril is going to not really a good thing for you to kind of get going. So let's get cracking, basically. So first of all, I'll just quickly introduce myself. So my name is Ju-Vern. I'm the co-founder at Quantico, where we solve FinOps problems for fast-growing companies. So previous to Quantico, I have worked either full-time or as a consultant to quite many startups, really, including quite a few marketplace startups. I've just put here in here a couple of the logos, really, of startups I've worked with. Some of which I guess you may also recognize. And now at Quantico, we work with almost 70 over businesses across a whole spectrum of industries. So it's fair to say that we've seen quite a lot of inner workings of challenges, I suppose, facing startups, particularly in FinOps. So I guess even before we kind of get started, like what is FinOps, right? And so enough. And for me, really, it's all about the intersection between finance, technology, and operations. And what this translates to the role of FinOps, that is, it's all about optimizing systems and setting up automations and building for growth. Now, you're probably going to ask, like, what is the difference between finance and FinOps? In short, FinOps teams is the new way of going about things. Finance teams are the old way, and to be honest, not really suited for fast-growing and changing companies. Although having just said that, it's a fairly bold claim that I've just made here. So let me try and make the case for you. Um, so I believe the main reason why most finance professionals have done, which is traditionally backwards looking at historical information, and more often than not, just the compliance bit, it's because they're working in silos, and the focus is just on the kind of wrong areas of the business, basically. And FinOps is about building the processes and technology, helping startups to scale. All right. So, and we can see things kind of moving in the right direction. Um, but it's probably worth also explaining, I guess, like what forces are at hand, working hard to keep it at the status quo. It's actually not surprising if you think about it. Accountants or finance professionals are one of the few jobs in the world where there's actually a professional body which administers the exams that students have to pass um, to consider themselves a chartered, certified, qualified accountant, right? The exams that they had to pass, like the ones that I had to pass with the ICW, which is the UK equivalent, specifically teaches you the old way, and the old way being historic information and compliance. There's very little about the future, let alone anything that's systems or technology related. Like embarrassingly, like I didn't even learn how to use or like how accounting systems work until my first startup role. Like I genuinely did not know how to post journal entries, which is really embarrassing because I had spent the past 3 years prior to that studying and trying to pass my exams. It was pretty expensive, really, both for the company that obviously sponsored me to do it, and just the time taken, right? And then startups and businesses specifically hire for this trained professionals, right? CPAs or CAs and your certified accountants to run their finance teams and hope for the best. So it's probably not surprising that they have a steep learning curve. They not only have to learn pretty fast, they also have to unlearn everything as well that they were taught in the exams. So actually, it's something that we at Quantico are trying to disrupt. We recently launched the School of FinOps to try and append the whole accounting and finance profession. But trying to tear down institutions that have been around for quite a while is actually not easy. But hey, that's what we're here for, right? Trying to disrupt the status quo. But anyway, just changing tack a little bit, rather than preaching to you the difference between the two, um, telling you the difference between the old and the new. What I thought would be quite good actually is for me to share with you a few cautionary tales of all the things that have gone wrong in the businesses that I've worked, and the things I had to fix just because of the incorrect focus that they had on, like, the compliance and the bookkeeping on the finance accounting side of things rather than on FinOps. And here's probably what I would say as well, just to start with, and I'll recap this at the end as well. I guess most founders, management teams would naturally gravitate towards hiring CFOs, finance leads, head of finance, thinking that they would be the ones who have the expertise to come and fix everything. Well, hopefully the stories would tell you that's not often always the case. And we'll see, I suppose, what happens at the end of this presentation. If I've done my job well, I would have succeeded in scaring you or at least kind of giving you a bit of an impetus to act. But hey, we'll find out after the presentation whether that's worked or not. All right, so let's move on to our first story of the day. So quick background. This was an e-commerce business, a drop shipping e-commerce business selling globally. About 25 employees, so not massive, but they were, like they could scale obviously quite easily across the world. And in terms of the kind of the setup, in terms of what they basically had just an accounting firm really, with the founder primarily managing the accounting firm. So what went wrong? Quite a lot of overpayment to suppliers. In fact, it was actually crazy when we went into it, realizing that they were constantly overpaying the suppliers. Would the suppliers tell them about it? Well, I mean, let's face it, some of the suppliers also had pretty shoddy systems anyway. So they, even if they weren't being unethical, they probably weren't even aware of it. And it's probably not top of their priority to fix it if someone was overpaying them. And then on the flip side, the complete opposite end of the spectrum, they were drowning in tickets as well, from like support tickets by suppliers like chasing for payments. So two extremes, right? All because they generally just weren't keeping track of their payables position, right? And what's the result of that? Well, poor cash management. Like it was so hard to predict cash. It's just because they couldn't, like they were just not paying people on a timely manner, or if they did pay people, they were paying people the wrong amounts. And then to kind of top it all off, there was also significant kind of signs that they were massively behind on their VAT payments, especially because they were selling globally as well. Particularly in Europe, there was a lot of things going on there that they just were not thinking about, right? And actually, what went wrong for them is why it went wrong for them is actually quite predictable. So one is this over reliance on the accounting firm really to manage the payments. On paper, it feels like the right thing to do, right? Oh yeah, accounting firm, you say you're going to help me present management accounts, so you should help us figure out what our payables position is, right? Um, Unfortunately, that didn't quite work out. The second bullet point here is also because also another cautionary tale. The founder just refused to let go, believing that he knew what was going on. So if there's any one of you out there who may be able to relate to this, well, that's it's probably not a good practice for sure. And then the final point here is the product and tech team. Like they actually had a product and tech team who was building the app, building the kind of customer experience, but they were completely oblivious to any potential tax implications that could come about. Just no one was thinking about it. Um, it was crazy. And when we finally kind of started working with them, we were like, okay, guys, there's quite a bit of things that we need to do here to get this going. All right, so that's case number one. Hopefully that's given you a bit of an insight. Case number two. So here's another e-commerce business, quite a bit bigger, about 100 over employees. And in terms of the kind of finance team setup, they have a financial controller and a CFO. So they came to us with these three problems, right? So first of all, their gross margin calculations was actually only an estimate. So the honest that they generally just had no idea whether they were profitable or not, which is quite a scary thought, given that that is literally the metric that they should be tracking. Um, Otherwise, like, how do you know whether they were successful or not, right? They were just guessing, basically, pretty blind about what they needed to be doing. Number two, they were overpaying suppliers, and actually, they suspected that that might have been the case before kind of working with us. And then when we kind of dug into it, we discovered the scale of the problem, which was quite a bit more than they expected. And that's because they were just paying them. So a supplier would send them an invoice, and they would just pay it. And well, you can probably tell that's probably not very good controls. Like if you're not even checking that those suppliers have actually billed you correctly, well, it is pretty likely that you're not paying them the correct amount, right? And the natural outcome of this as well is just you don't know what's going on, like poor cash management, right? So again, like it's just because it's and sorry, the final point here is yeah, the finance team were also completely overwhelmed. They didn't know like how they could actually even scope out a solution with their developers. and they just resorted to doing it the manual way, basically. And two reasons really as to kind of the reasons, as to the factors as to kind of why this happened. So on paper, they look like they have a finance team to sort things out, but the priority areas were just all over the place. The CFO was brought in, and they automatically jumped on this remit to building financial models and forecasting without realizing or maybe deciding that it was okay, um, that they're actually kind of basing this on inaccurate data. So that's pretty scary if you think about it, forecasting based on estimates, right? Um, and the FC as well was brought in and was just completely overwhelmed and also did not understand how all the systems link together and just resorted doing things the manual way, basically. All right, moving on to case number 3. So a much bigger company, about 250 people now. Um, so just to give you an idea that this is not a problem that that small companies face. Is actually quite systemic, actually. SaaS business, not quite a marketplace business, but I figured there's a lot of kind of learnings from this case for sure. Um, and in terms of their kind of setup, there's a head of finance who's leading sort of finance function with support from the accounting firm. And the biggest thing when we started with them is they just basically internally just disagreed on what the revenue figure is. Quite an important one. Nobody agreed on what the MRR is. Sales had a different figure from Salesforce. Marketing had another view of the world from HubSpot. Finance obviously had a different view of how things were based on cash collection, based on gap reporting and all that sort of thing. So that was pretty big. And then the whole process was pretty time consuming. Um, like the revenue recognition piece, the reporting piece, and the billing system was only built basically to send out invoices and initiate the payment, but no one had considered how that flows through to reporting. Again, there's a compliance issue as well, like where they just basically completely forgot to collect sales taxes. So just completely, no one was kind of owning it. So no one said to them that that was something they had to do. And for me, the worst thing that went wrong for them because of the kind of focus on the wrong priority areas is the fact that they overstated their bank balances by about $300,000. So not an insignificant amount. It was pretty harrowing actually, because it also meant that when we discovered the problem, or the fact that the bank balances were stated by that much, we had to dip into our debt a lot sooner than we expected, which didn't put us into a great working relationship with our banking provider. So not good. Um, and I guess why? Why did it go wrong? Like, it wasn't as if there was not enough people kind of working on it, although you could argue with more resources that problem may have been mitigated. But really, again, it's just a kind of question of like the wrong priority areas. So the product and tech team built something and it made sense, but for them, um, because no one owned the piece of how everything kind of came together. So they built something and the remit was collect money or send out invoices, but then there was no like, oh, what about how this all comes together in terms of reporting, right? And the head of finance was focused on just churning out the management reports, but then had no kind of understanding of how everything worked across all the different teams. Again, because no one was owning that piece. Like the finance person was very much siloed in that finance team, building something that worked for finance without kind of consideration to how that would work for sales, for marketing, and for the management team. And case number 4, which is actually the final scenario I have for today. So quick background: marketplace for medical staff, working with a part-time CFO, with support from an accounting firm, a bit smaller now, about 40 people or so. And immediately as we went in there, like the first thing we discovered was how the historical expenses were just overstated, which is also, again, how did that happen, right? Like, on the basis that there's been an accounting firm that's been working there, and also a part-time CFO as well, who on the face of it, should be responsible for owning numbers, right? And then the second thing that went really wrong for them, or just something that they came up to us with, is just they were getting so many disputes from medical staff on payments that they were receiving, right? It was just overwhelming their support team and their account management team. Why did it happen? Similar stories to the ones I said before, like, but again, like the CFO was brought in, but very much focused on, the financial modeling, forecasting, and then not realizing that the accounting firm had actually been doing things incorrectly. So you're in effect then forecasting off the back of inaccurate numbers, which is obviously not ideal. And then the second point, like no one owned the accuracy of the invoices basically issued. Support and management, account management were reacting to the disputes. They reported bugs to product and tech, but then product and tech didn't know what they could do and how, actually, to be honest, how they could actually overhaul the process to reduce the errors. They could build the product for sure, like on paper, like building timesheet approvals and things like that, but they didn't necessarily like feel that they could like overhaul the whole process, even changing company policy, I guess, to reduce the errors. So there you have it. Four cautionary tales of, I suppose, what has gone wrong, and in my experience, I obviously have shared with you the scary instances. So hopefully that was like you've learned a thing or two here. So probably best for me to kind of recap the common themes, I suppose. And the first one here is like, why do FinOps often get ignored? Like why is it not given more spotlight? One of the reasons I suppose I see quite commonly is this expectation, I suppose, that accounting firms will come in and sort it all out because that's what they're responsible for. If you ask, if you ask like a peer, like they'll be like, oh yeah, yeah, like finance, yeah, definitely. Like maybe at the early stages, if you're not ready to hire someone yet, hire them, well, engage in an accounting firm and they will sort you out. And if you go to their kind of websites, they will talk about, yeah, like, this is what we're going to own and stuff like that. The reality, though, is that a lot, like accounting firms are great at quite a lot of things: compliance, payroll, taxes, bookkeeping, absolutely great at that. Not so good at the intersection between the finance, the operations, and the technology. And those are the bits oftentimes, like because no one's owning it, is why you see a lot of the problems that I've seen, I suppose, in the cautionary tales I've shared with you. Second problem is because there's expectation that the CFO is going to come in and fix all the problems. And again, too many instances of CFOs coming in, solving, I suppose, the wrong things, I guess, and not really having the finance and operational expertise to actually fix the problems. And if they come from an accounting background, their focus is very much on accounting, not on FinOps. Perhaps they may come from a more kind of banking consulting background, in which case it's all about strategy and fundraising, not about FinOps. Um, so you get to this point where like people should be thinking about it, but it's often ignored. A bit like a no man's land, I guess. So those, I suppose, if there's nothing you took away from that, like hopefully those are the kind of few points that you would remember. And I hope that the kind of four cautionary tales have kind of given you a bit of an idea, I suppose. And I guess before I kind of wrap up the presentation, I would love for you to ask yourself, is there anything that you can relate to in those cautionary tales? Well, be honest. I mean, we're not, obviously, this is not an exam or anything, but I would love for you to kind of be honest with yourself. And if there's anything happening right now where you feel maybe perhaps I am falling quite close to that trap, basically. And this second question I'll ask yourself is like, when you should hire for this expertise. I don't think the question is if, I think the question is when. If I've done my job well, that is, and managed to convince you that if you did ignore FinOps, that's to your own disadvantage. Cool. Thank you so much for having me. Thanks so much for listening. My name's Ju-Vern. If you wanted to find out more about what we do, well, you can check out the websites. And I would hopefully see some of you around during the networking sessions.